Hey guys, Mike here. So as you know, Jerome Powell had his meeting. The Fed came out with all their information. And I got to tell you, if you heard it, if you saw it or anything like that, you saw anything bullish out of that, then please let me know in the comments what you saw or heard. A lot of us in the Discord, none of us saw anything bullish. And I will say this, give Jerome Powell credit because he tried and did everything he could to make sure he didn't sound dovish, right? And there was actually... it was worse news for the market or the economy, especially, not just the market, the economy in general, because I'm going to go over the dot plots and what they came out with and what you really need to know, which is extremely important to understand. If you see the market start to roar, you know it's just totally irrational, or it's one of those, hey, we know it's the last hurrah, so we're going to run this baby up, which I've showed many times is the case. All right. And, wasting no time, got a lot to put in this video, so I'm just going to get into it. As you can see right here, guys, this is what came out. And understand, pay very close attention, 2023, which is the second column. Real GDP. They had it at 1.2 in September. 0.5 is now what they've come down to. Unemployment rate. This is the big one, right? Talked about this a lot. 4.4, they thought in 2023. Not good enough. We're going to raise it to 4.6 is what they think is going to happen. Now, obviously, usually they underscore this, so it's probably going to be higher than that. But anyway, PCE inflation. Had it at 2.8 in 2023. 3.1 they raised it to. Core, pay close attention to this one. This one he talked about a lot. 2023, and I'm not talking about 2022 because we're basically at the end of 2022. 3.1 was in September, and now 3.5. And he talked about this being a real problem and a lot harder than they thought to get down. And I'm going to kind of go into why that is. This is the big one. This is what caught people off guard, and the market immediately went down. 2023, 4.6 Fed funds rate, now 5.1. You understand what that means? And I want you to look at this dot plot. This is the key. See these dots in the second column? I'm going to show you September's. This is now. Look how many dots are above the 5. You got some going as high as like 5.5. Okay, so anywhere from like 5.1 to 5.5 is the range. Majority of them are sitting around like 5.1 to 5.2, right? And you don't see any cuts going on this year. But check out September. Look at the second column. Do you see any dots above the 5 line? None, 0, zilch. And now you only see 2 below it. And he made sure he reiterated that right there. And here's why. I mean, you got to just stick with what the truth is. And it's the problem is we're 70% services, right? So this is CPI, urban consumer commodities, and then there's services, right? Less energy and food. Well, you see the consumer commodities, less energy, food, it's been going down. But look what's happening with the services. Remember, 70% of the industry is services. This is where people are having a lot of trouble finding help right here. And that's a key, right? That's what's driving these wages up, and that goes into this right here. 3-month annualized percentage change in CPI, and then average hourly earnings. Well, you see the CPI is heading in the right direction, right? But then you look, what's happening in earnings? Heading in the wrong direction. And so that's why he keeps stressing you cannot have price stability as long as people are able to basically hold employers over the toilet demanding a certain wage before they come work for them, or demanding they're going to get major increases in pay, or they're going to leave. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And you guys always want me to make you aware of this stuff, so I'm just letting you know that Seeking Alpha reached out. They're doing $39 end-of-year flash sale for the first year, which is normally $239. And for those of you wondering, if you've never heard of Seeking Alpha, because I actually use them for research and stuff, you can see right here, here's the website. Trending is probably my favorite one. My portfolio is the second one. I like to go into top stocks, and then I go into stock ideas, because God knows we all need them, and ETFs and education. That's probably my top ones right there. So give it a shot, take a look for 39 bucks. I think you can even go on the site and just play around. That's another one of my favorites is the screeners. I have like 2 I use. And so, energy. Yep, putting out a members video on that Friday, and can't wait to get their feedback on that one. So check it out, see what you think. It's in the description down below. And he made it a real point to reiterate the services sector is the main problem. That's 70% of the economy, right? People are still having problems finding help. They're having to hire and pay a lot more, right? I got family members, we got friends that run their own businesses. They complain about it all the time. Our school system even complains about it. It's not like a service, but we can't find bus drivers, cooks. We can't find enough teachers. Again, I don't know if you consider that being a service industry, it's more government, but still, we're still running into that even now, right? And I'm going to put a graph in tomorrow's video to show you why, right? I already kind of shared it in the Discord, but to show you, I figured out why we have a huge problem on the services side now. And I kind of knew it, but I didn't see the data, and I wanted to put it out there unless I see the data. So yeah, that kind of makes sense. But again, reiterated price stability. They're going to keep raising rates. It may be slower, right? They're going to maybe slower because they have to see. Like he said, we hadn't even felt the effects in the economy of these rates. We hadn't even felt it yet. And so it's kind of, if you get a raise and they give you a 50-cent raise, it takes a long time to really feel like you got a 50-cent raise, right? Or even a dollar raise, for that matter. I mean, it takes time for you to go, ooh, I really noticed it in the bank account, okay? Well, it's the same thing with rates when it comes to the economy. It has to filter through, and then there's the balance sheet. That's a whole different ball game right there. But it's all about the M2 money supply. It's all about draining liquidity out of the market, and it don't work out well. Basically, I'm going to show you a chart here a little later on. You'll see what happens to the market, but for the economy in general. And he went on to say that they talked to a lot of companies, and they don't want to lay people off because if things don't go down, they pick back up. They've had so much trouble finding help, right? If you let them go, they're afraid they can't get them back. And so, but he reiterated to the nth degree that we don't see any scenario. This is what they said. They don't see any scenario of them not trying to accomplish their 2% goal in inflation. And they don't see, and it'll be based on data, of course, any kind of rate cuts anytime soon, because they have to get inflation under control. And he even said, we know it's going to be painful. People are going to lose jobs, and it sucks. And they wish they didn't have to do that. But it is what it is, right? And I think he can't say it, but I think we all know what would solve this problem quick, fast, in a hurry is a recession. That's just the way it is, because unemployment would go up fast, costs would come down, and we'd be right back. You can pull up a chart where it has recessions and pull up the inflation data and see how fast it drops off a cliff. Because when you kill demand, it tends to do that. And so, that's where he stands. That's where we're at. And you can see it's so weird. I mean, look at this. I mean, look at the S&P. Where'd they leave us? Right below the 200, right below, back in that descending channel, right? And I mean, look at the RSI on the daily. Hadn't crossed over the 50 yet. The MACD, looking a little rough there. But, we are setting lower lows on the RSI. And if you look at the hourly looks, concerning in the short term. Obviously, it's crossed below the 50 on the RSI. MACD has done a bearish crossover. And, I was talking to people, and you see right there, I mean, they just keep us hovering that 200, but not far away, like right there. I mean, we're only, even to get to the outer edge there, about maybe 2% away to break out of this descending channel. But I put this in here, and I'll tell you guys about this periodically. I put this in here this morning in the Discord saying, hey, someone told me yesterday this worked out. I wasn't paying attention, but according, to Max Payne, it's going to be at 400 today. So let's see if we stay between like 398 and 402. And you can see right there, right? And where did we end it for the day? $399.40, only 60 cents off, whatever percentage that is, right? And so, and remember, I forgot to mention this week is quad witching. Friday will be quad witching. And this is 4 times a year where you get the most, not just weekly options, monthly options, everything you can imagine, just so many options expiring that, boy, it's going to be a lot of manipulation this week trying to wiggle this out. And I can't wait to see if that works out on Friday. We'll see. But just that's why another reason it's going to be so volatile this week, especially on Friday. And I tell you what's going on with the VIX? I mean, I think it's broken or something because, I mean, you just look right here. Again, S&P goes down, VIX goes down. S&P goes up, VIX goes down. VIX goes down like no matter what, it seems. And so I don't know. If you know what's going on with the VIX, let us know. Because, I mean, are we ever going to get over 40 during this sell-off? Is that what's going to happen? I don't know. I mean, I actually did a video day for the members, and I did a lot of research on it about how to spot a bottom in the market and how the NASDAQ 100 usually bottoms first, and was October 13th the bottom, and these indicators line up and all that stuff. And I'm not saying that was the bottom. I'm saying look at it, right? Because some of those indicators didn't flash the green sign, right? But it's good to at least know that, because could this be the first time S&P doesn't bottom because oil stocks don't roll over, which I'm putting one out Friday for the members about that, because we're having a divergence between oil prices, oil stocks, and XLE, right? And it's happened one other time in the last 30 years. And so I got to get the members' feedback on that one. People that trade oil and try to help me out, because of the years it happened, I was off overseas in the military. And so that leads me to the last 2 charts. And I've actually talked about this one before many times. And I've been talking about this one for about a year now. What would happen when they raise rates and stuff? And of course, what's going to happen? The interest on the debt's going to go up. But I want to show you two charts that kind of show this hand in hand and make sense and show you how much the market needs the government to keep spending a bunch of money compared to GDP, right? So this is U.S. Treasury federal budget deficit or surplus as a percentage of nominal GDP. And the key to look at this is, and you look at the dates here, what is that, 07, 08, it was coming down. Well, what was happening in the market? The market was tanking. Back here, when it was coming down here, what was happening? The market was tanking, right? And so what was happening right over here when the market was skyrocketing? The government was spending. I've actually showed a detailed video on this. They started just plowing money into the government and everywhere. I mean, they were just spending like their hair was on fire or something. And of course, you can look to the right where the arrow is and what's happening. They actually started reining in the actual deficit, which is actually a good thing to see. But here's the other thing to look at. Remember I told you about the interest on the debt as these interest rates go up? Well, look at it now. This is interest expense on U.S. public debt outstanding. That's in billions, by the way. So that's 766 billion right there. And that right there, because remember, we owe trillions. And what is it, $30 trillion? And that's going to continue to go up. And so, like I told you, the higher they hold these rates, the more they take the rates up, the more the interest on the debt will go up. And pretty soon, if this continues, it will be the #1 line item on the budget. It will top Social Security. I don't know how sustainable that is. That's why I think a lot of people are putting a bet saying, no, the Fed's going to pivot. Like the Fed's going to pivot because you just can't keep building up that much interest. And I know people don't think we got to pay our debts. We do. Okay, it is what it is. And I did want to bring up an interview I saw yesterday and get you guys' input on. And it was what's so confusing, right? Is this guy did an interview and he's a trader / investor. And he said, I think we're going up from here. I think the second half of 2023 is going to be terrible. The first half is going to be good for the market. And they said, why? You basing that on any data? He said, the only data I'm basing on is the fact that I go out to stores and every one of them are full. I go to gas stations, they're full. You go to the airport, it's full. And I thought to myself, I just went shopping yesterday for Christmas. Packed out. Packed out. I couldn't barely find a parking spot, right? And then, as I put in the members' daily news briefing this morning, there's Delta. Delta's raising guidance like for 2023, talking about times are good. Like it's good, right? I mean, I'm like an airline is raising. But hey, we just got friends that just got back from Jamaica, another friend that went somewhere. I mean, if you got an airline raising guidance and telling you, man, we're in a good spot, this is good, right? Then and they're fixing to give their pilots, I think that's the one giving their pilots like a 30% raise over the next, is it 4 years or something like that? And I'm thinking, my Lord, where did that come from? But when you look at it, and like the guy was saying, when you talk to people, they're just doing their thing. If you're middle class or up, man, it's just like there's nothing going on. What recession? He's like, what recession? I'm like, I look around, I keep saying that same thing. It's like, what's going on? You know, and when you look at that, it's confusing, right? It's very confusing that there's always dire data, 90% of CEOs see recession, this and the other. But when you look out in the real world, and I'm sure there's areas that probably aren't doing as well, right? Like if you're in a town that has a lot of manufacturing facilities, maybe not, right? Because we've seen how the data is on that. But if you're surrounded by a whole bunch of just services, you know, there you go. I mean, you're like, hey, this is looking good. All the malls are doing good. This store is doing good. Airlines, buses, whatever. People are traveling. And, you know, I mean, somebody was telling me when they were trying to book a vacation to one of the islands, they refused to do it because the prices are so high. And why are the prices high? The prices would be high if demand wasn't there. But demand's high, so people are going to pay it. You know, and people are paying it. That's what I'm saying. I mean, you go to any rate, go to the restaurants, packed out. It's the way it is. So for it to be dire times, I keep saying it's confusing. It's hard to figure it out, but that's where we're at. Let me know how it is in your area and stuff, or what you think on that. I mean, are you seeing the same thing that he's seeing, that I'm seeing, and you know, the data just doesn't add up. But you know, anyway, if you got anything out of it, hit the like and subscribe button. I really appreciate it. Buckle up for a volatile day tomorrow, especially Friday, okay? And let me know what you think it's going to be doing, what you're doing, and I'll see you tomorrow.